You see the sweep. You see price close back into the range, you call it a C2, and you enter in the next candle. Stop on the low, target a standard 1 and 2 risk to reward, then price hunts your stop and goes the other way around. Sounds familiar? The problem isn't your entry. The problem isn't your model. The problem is that the C2 you thought you had wasn't one. In this video, I'm going to walk you through the 4 things that make a C2 actually valid, and I'm going to show you which one most traders completely skip. By the end of this, you'll have a checklist you can run in real time before you ever call a C2 confirmed. Let me start with the definition. A C2 is a candle that sweeps a meaningful level and closes back inside the prior range on the same candle. 2 words in the definition do all the work: meaningful and close. Most tutorials start with sweep and close back. That's where confusion starts, because not every sweep is meaningful and a close back inside the range is just step 1, not the whole picture. So I want to break this into 4 criteria. 4 things I check every single time before I call a C2 valid. Miss any one of them and you're not trading a C2. You're trading noise. Let's go through each one. Did it sweep a meaningful level? Not every week through a high is a manipulation. The algorithm targets specific pools of liquidity. Previous day's highs and lows, equal highs, equal lows, obvious fair value gaps, sessions extremes. These are levels where stop orders are stacked. That's what it's after. Here, look at this sweep. It's running through a prior day low. That's a meaningful level. The algorithm had the reason to go there. We can see that we have a valid C2 closure that leads to price taking out the resting liquidity above the Asia highs. Now compare it to this one. That week, it pokes above a random candle in the middle of a range. There's no liquidity pool, no equal highs, sessions extremes, or fair value gaps. The algorithm wasn't targeting that. That's just a week. So price continues to expand, invalidating the idea of a short. So same looking setup on the surface, same looking candle, completely different meaning. So first question every time, what exactly did it sweep? And was there a reason to sweep it? Did a CISD form on the lower time frame? Second question, and this is the one most traders skip entirely, so pay close attention. The C2 on the higher time frame tells you where the reversal could be. It does not tell you that the reversal is actually happening. For that, you need to drop down to a lower time frame and wait for a change in state of delivery. Here's what that looks like in practice. So this is NQ on the 1-hour chart, and on the right side we have the daily candles. We can see that the daily has formed a C2, it swept the prior day low and relevant lows and closed back inside. Now I drop to the 1-hour chart. What I'm looking for is to see if the series of opposing candles get closed over, forming a bullish order block. Is the lower time frames confirming the delivery has shifted? Price is no longer making new lows on the 1-hour, it's now making higher highs and breaking structure to the upside. That's confirmation. Without it, all you have is a sweep and close. You don't have proof that the reversal is actually real. Now, here's what no CISD looks like. The daily C2 looks clean, but when you drop down to the 1-hour, price just churns sideways. No candle closes to the series of outclosed candles, no protected low forms, there's no shift in delivery. Traders who entered on the daily close alone get stopped in the chop because the model never confirmed. So one more thing here, weak size on the C2 tells you how far price can realistically run once CISD fires. Small wick on the C2 means price didn't use much range to create the sweep, so there's room to expand. You can target deeper liquidity, prior session low, standard deviation projections. Large wick on the C2 means most of the range was consumed in the sweep itself. If a reversal comes, it will likely only retrace back to the C2 open or the daily level, so keep targets tight or trade the C3 continuation setup. Think of wick size as a fuel gauge. Less weak, more room to run. So second question every time, has a CISD formed on my confirmation time frame after the C2 close? Was the sweep itself aggressive? There's a difference between a sweep that aggressively runs through a level and snaps back in 1 or 2 candles, and a sweep that slowly drifts above a high and kind of wanders back. What I'm about to show you is the part most people miss, and is the reason your valid setups keep stopping you out. Here's an aggressive sweep. So price takes out the lows twice, forming a nice C2 candle. We have a nice pool of liquidity above, so all we need now is a CISD. And to have a valid CISD, price has to close above these 2 opposing candles. We can see that the whole sweep and close sequence happens in 3 candles. That's the algorithm moving with intent. Now here's a slow one. Price takes out a failure swing into a fair value gap, then forms a C2. The problem is that for the CASD to happen, we must really move with conviction through all of these up-close candles to validate it. We can see that price gradually makes its move down, taking a lot of time to achieve the CASD. Because there was no conviction going in, there's usually no conviction coming out, and we see price completely reverse, invalidating the supposed CASD. So, the faster and cleaner the sweep and rejection, the cleaner the C2. The more price lingers around, the weaker the signal. So ask yourself, did the sweep happen with speed, and did it reverse cleanly? Does it align with the higher time frame bias? Even a C2 that passes the first 3 criteria is a lower probability trade if it's working against the higher time frame draw. Here's what I mean. On this day, the daily bias is bullish. The drawn liquidity is to the upside. So if I see a C2 closure on the 1 hour that's bullish, sweeping a relevant low and closing back inside, that C2 is working with the daily bias. That's an A+ context. When I drop to confirm the CASD, I'm expecting clean, fast delivery. But what if I see a C2 closure on the 1 hour chart that's bearish, sweeping a relevant high and closing back inside on a day where the daily draw is to the upside? Well, criteria 1 and 3 might pass, but I'm now trading against the high time frame flow. Even if the CASD does fire on the lower time frame, the move is likely to be slower, choppier, and shorter. Those are C-grade setups at best, and your targets need to reflect that. So as you can see here, let's see that closer. So down on a 5-minute chart, we can see that we even have a CASD confirmed. So what we would be waiting for now is a continuation order block to potentially get on site with the move. But because we are trading against the higher time frame order flow, price just disrespects the equilibrium of the previous 1 hour candle and starts drifting higher to the upside draw. The model doesn't say ignore counter bias C2s forever, but it does say your A+ trades are always with the draw and not against it. So ask yourself, is this C2 aligned with where the high time frame wants to go? Alright, let's test this. I'm going to show you 3 NQ charts, and for each one, I want you to run through the 4 questions before I tell you the answer. So for this one, this is NQ on a 1 hour chart, and the vertical lines delineate the different days. So I want you to pause the video now and think through the process. Do we have a valid C2 entry? Ready? So we can see that we moved into a large buy-side liquidity pool on the 1 hour chart, so we can expect a different phase of price to happen. The next day takes out the previous day's high, confirms it with a CASD, and closes back into the range. So we can expect the next daily candle to expand lower to downside draws. We have a potential setup in Asia where we move up into the fair value gap and sharply close back inside the previous range. But let's focus on the candle in the New York session. So we move up from the current low of the day back into the series of fair value gaps and then form a C2. This is the 8 a.m. 1 hour candle, and above is the 5-minute depiction of it. We can see that at 8:30 we had the red folder news, but we can still see that we closed below the opposing candle, forming the CASD. We now have confirmed that we are in line with the daily bias, have engaged the relevant level, so a fair value gap. We closed aggressively back into the range and have confirmed the CASD. Everything checks out, so we expect to have an expansion as our new phase of price, which we see we do. Let's try that again. Would this be considered a good C2 to take? Think about it. Pause the video now. Okay, there is a sweep. It has a relevant level. We have buy-side liquidity above us. The close is back inside the range, and we have a CASD on a 5-minute chart. Criteria 1 and 2 look okay. We have a somewhat sharp reaction to the upside, so 3 checks out too. But look at what we have been doing the past few days. We have been drifting lower. If we were to reverse here, this 1 hour C2 should have been much more expensive, showing great intent. Instead, because our daily bias was still somewhat bearish, having no conclusive evidence that the current trend has changed, and this 1 hour C2 fails to this place, we can see that price starts to chop and ends up grinding lower. This one is the trickiest. I'll let you think for a second. Okay, we can see that we have a really aggressive sweep, where we take out equal lows inside a fair value gap, but in the process create another failure swing. So criteria 1 and 3 get a pass, but we can see that on the 5-minute chart, we close above the single down close candle, validating the CASD. But look at the overall structure. We are currently in a consolidation, and we did not really have a strong internal manipulation, given that we left those relative equal lows. So this becomes a very risky setup, because the higher time frame is not yet primed for expansion. And as you can see, we end up driving even lower to those equal lows. Before I wrap up, 3 mistakes I see constantly. The first one is treating every week through a level as a sweep. The week has to be targeting something real. If there's no liquidity pool there, the sweep means nothing, and the C2 means nothing. Number 2, entering on the C2 alone without waiting for the lower timeframe CASD. The C2 close on the higher timeframe tells you where the reversal is. CASD on the lower timeframe tells you that it's actually happening. One without the other is incomplete. You will get stopped out waiting for a move that the model hasn't confirmed. Number 3, calling a valid C2 with a CASD confirmed and entering immediately at market. Even with all 4 criteria met, your entry still needs to come at a valid point of interest on your execution timeframe, a fair value gap, an order block, a protected swing. A valid C2 with a CASD is a setup signal, not always a market order trigger. So wait for price to come to you. Run the checklist, confirm all 4, then wait for the model to complete. And if you want to understand what happens after you have a valid C2, specifically why traders still get stopped out even when the C2 is right, the next video covers exactly that. I'll be walking you through some trades I lost because of one step I was misreading. That video is going to be up next week, so subscribe so you don't miss it. Peace.